What is going on, everybody? Welcome back to the channel. Today, we need to talk about something huge, something that's shaking the very foundations of the precious metals market. We're talking about an absolute apocalypse in the silver and gold markets. Prices are moving in ways we haven't seen in a very, very long time, and if you have any skin in the game, you need to understand what is happening right now. So let's just get straight to the charts. Look at this. Gold, silver. We're seeing extreme volatility, sharp movements that have caught a lot of people completely off guard. Now, the mainstream narrative you're probably hearing is all about inflation data, interest rate expectations, and the usual market noise. And yes, those things are part of the story. The latest CPI numbers came in a little hotter than expected, and the market immediately started pricing in a more aggressive stance from the Federal Reserve. A stronger dollar typically means weaker precious metals prices, and we're seeing that play out. It's the classic knee-jerk reaction. When the cost of holding a non-yielding asset like gold goes up, some investors jump ship. But is that all there is to it? Is it really that simple? I don't think so. There's a much deeper, more complex game being played here, and that's what we're going to uncover today. Let's peel back the first layer. Beyond the headline inflation numbers, we have to look at the global economic picture. We're seeing warning signs from major economies around the world. China's economic data has been shaky, showing signs of a slowdown. Europe is still grappling with its own energy crisis and economic uncertainty. When the global economy looks fragile, you'd typically expect a flight to safety, a rush into gold. So why the drop? This contradiction is our first clue that something unusual is afoot. The market is not behaving rationally, or at least it's not following the old playbook. It's reacting to something else, something hidden beneath the surface. This brings me to the secret reason I mentioned in the title, and it has everything to do with the paper market versus the physical market. For years, we've talked about the massive disconnect between the price of paper gold, futures contracts, ETFs, and the actual price of physical bullion, the coins and bars you can hold in your hand. What we're seeing now is a dramatic and potentially deliberate move in the paper markets designed to shake out weak hands and create a specific narrative. Think about it. Who benefits from a sudden, sharp drop in the paper price of gold and silver? The big institutional players, the bullion banks. They can use their massive leverage in the futures market to push the price down, trigger a cascade of stop-loss orders, and create panic among retail investors. Once the panic sets in and people start selling their paper assets, these same institutions can then step in and accumulate physical metal at artificially low prices. They know the long-term fundamentals for gold and silver are incredibly strong. They see the unprecedented levels of government debt, the persistent inflation that's not going away, and the growing geopolitical instability. They know that, in the long run, physical, tangible assets are the ultimate safe haven. So this isn't a crash born out of fundamental weakness. It's a manufactured crisis in the paper market. It's a massive transfer of wealth disguised as market volatility. They are literally trying to scare you out of your positions so they can buy them up on the cheap. Let's dig deeper into the evidence for this. Look at the COMEX data. We're seeing some very unusual activity in the open interest for both gold and silver futures. Large blocks of sell orders hitting the market at specific illiquid times, like overnight when trading volume is thin. This is not the behavior of a typical investor trying to get the best price. This is the footprint of a large entity with a clear objective: to drive the price down hard and fast. At the same time, reports from bullion dealers all over the world are telling a completely different story. Premiums on physical coins and bars are not going down. In some cases, they're actually going up. Demand for the real stuff remains incredibly robust. People are not selling their physical holdings, they're buying more. So you have the paper price plummeting while the demand for the physical asset is soaring. That is the biggest red flag you could ever ask for. So what does this all mean for you, the individual investor? First and foremost, do not panic. This is the absolute worst thing you can do right now. Selling into a manufactured takedown is playing right into their hands. Remember why you invested in precious metals in the first place. Was it to make a quick buck on short-term price swings? Or was it to protect your wealth from long-term currency debasement and economic uncertainty? If it's the latter, then nothing has fundamentally changed. In fact, the case for holding physical gold and silver has only gotten stronger. These events demonstrate just how fragile and manipulated the paper financial system really is. This is a test of your conviction. The market is trying to shake your confidence. It's trying to make you question your strategy. My message today is to hold the line. If you have the means, this could even be a generational buying opportunity. When the paper market offers you a discount on a real, tangible asset whose fundamental value is increasing, you should pay close attention. Think of it as a Black Friday sale for real money. Now, I'm not a financial advisor, and this is not financial advice. You must always do your own research and make decisions that are right for your own situation. But from where I'm sitting, the writing is on the wall. The disconnect between paper and physical cannot last forever. At some point, the dam will break, and the true price of gold and silver based on real physical supply and demand will be revealed. When that happens, you do not want to be the person who sold their holdings at the bottom because you got scared by a paper raid. Let's also consider the central banks. What are they doing? Are they selling their gold? Absolutely not. They are buying it at a record pace. Countries around the world are repatriating their gold and adding to their reserves. They are quietly de-dollarizing and preparing for a new financial reality. They are doing the exact opposite of what the paper market is telling you to do. Follow the smart money. Don't listen to the noise. Watch their actions. Central banks are the ultimate insiders, and they are buying gold hand over fist. What does that tell you about their confidence in the future of fiat currencies like the dollar? So, to recap, we're seeing a massive coordinated takedown in the paper markets for gold and silver. This is designed to create panic and allow large institutions to accumulate physical metal at a discount. The fundamentals for precious metals remain stronger than ever, with persistent inflation, staggering debt levels, and central banks buying at a record pace. The demand for physical metal is soaring even as the paper price falls. This is a classic textbook manipulation. The key is to see it for what it is and not fall into the trap. Stay calm, stay focused on the long term, and understand the game that is being played. This volatility is not a sign of weakness in gold and silver. It's a sign of desperation from a system that knows its time is running out. Thanks so much for tuning in today. I know this can be stressful, but knowledge is power. The more you understand what's really happening, the less fear you'll have. If you found this analysis helpful, please hit that like button and be sure to subscribe so you don't miss our future updates. We'll be tracking the situation closely. Stay safe, stay diversified, and we'll see you in the next video.